This is askSlim Live, March 14, 2023. Information and support for traders and investors in a time of crisis and beyond. All right, we got a little legal stuff to take care of. It says that everything that we bring you from askSlim.com is entertainment and educational. That's the purpose of what we do, and it's not to be construed as investment or trading advice. Everything we do, whether it be oral or written, or any way referring to anything relating to this website, is to provide information that you could potentially use with your investment advisor. We always encourage you to consult with your trading plan or financial professionals before making any investment or trading decisions. Live events are being held as support for members not included in memberships. They've been created in times of special needs. These events are likely to be recorded. This one is being recorded, and I want you to note that it may be offered for public viewing, and we certainly do offer it on our website for everybody to see. We'll always act in ways to protect your identity. And an example of that is I just recently did an ebook with a group that was pretty decent. And of course, I thought our presentation in there was great. Then they asked me to do a swap with my list for their lists, and I flatly told them no. I just, no matter what, no matter the benefit of us, we're not giving out your identities at all, your email addresses. So that's a strict rule for us. So I want you to know that. Your participation in this event is an acknowledgement that you understand and agree. Please refer to our terms, disclaimers, and full legal at askSlim.com. All right, this is the information. If you want to write to any of us about any particular questions that you might have, please, it helps us a lot if you refer your questions to the right person. And if you have any doubt about that, just write to team@askSlim.com. Remember, I really only take questions from level 3 and 4 members, or those people that invested in the workshop. So if you're a level 1 or 2 and you want to talk to me, please upgrade. This is who we have here, the whole team. It's me, Matt, Arby, and Katie. This is a spectacular team, and you've seen the fantastic work that we've been doing since we've all been together, which 3 of us have been together for quite a long time. Katie has been a fantastic new member, and not even so new anymore, that we have this fantastic team. So appreciate all of the great work that they do, and I'm going to hand off everything that I do to them sometime. Let's hope I get another 5 or 10 years. What do you think?
Yeah, I
All
hope
right.
so.
All right, so what I'm going to do is I'm going to bring you a market brief looking at the technical analysis of the stock market. I see there are some questions already up there on the stock market, so I'm going to do my best to answer those. Now, Matt is going to bring you a brief update on the status of the new MCM with a show of hands. Who is using the MCM and really has enjoyed it? All right, hands going up. Who has not yet figured out how to use the MCM for their trading purposes? And there are more hands going up that have not yet than have currently. So we just learned something out of that. So that was a good question then, because we want to make sure that you know how to use this to your best benefit. That's about everything that we offer, of course. And we're going to do our express round where you can ask your questions. And I can't believe how many questions are up there already. So we'll do our best to answer in the next 60 minutes is how long we have between what I'm going to bring you, Matt's going to bring you, and what the whole team will be able to answer for you. So that brings us to the analysis of the stock market. So we all know that this has been just an amazing time just these last few days. It's just seemingly out of nowhere, the banks, which have been so well capitalized, according to the Fed and the government, all of a sudden found out that that might not be the case. For those of you that don't really understand what happened, I'll give you a couple sentences about it. And that is specifically the Silvergate Bank is a bank that had a lot of exposure to the crypto industry, and they ran into trouble. They got taken over. Then we had SVB Bank, which is in Silicon Valley Bank, and they had a lot of exposure based on the fact, well, several things. First of all, they had a huge amount of their depositors were in the startup categories. So they had a lot of businesses in there that run their business through that bank, and they had a lot of money, a lot of them in that bank. When things started to get shaky for that venture capital area, there were a lot of these businesses that needed to withdraw money out of there. So what happened was that the bank was going to get a downgrade, and they realized that they needed to raise capital. Well, that news of the downgrade hit so quickly that they weren't even able to raise capital, and they were short about $2.25 billion, and they got forced into selling their long-term government holdings at a loss. So they needed to cover that loss. Depositors got super scared. Investors got super scared. They couldn't cover the loss. The government had to go in and take over the bank. They're essentially then the investors lose all of their money. The bondholders lose all of their money. Supposedly, the depositors, which should have only been made whole up to $250,000, were made whole completely. There's a lot of, I'm not in favor of that, but doesn't matter. And a lot of people are arguing whether that should have been done. And it kind of makes the FDIC impotent. I mean, they have no more value anymore, because if the government's going to cover anything, who cares about the 250? And of course, then there's the moral hazard risk. So that bank got taken over. There was another bank that got taken over, and the name escapes me right now. So there were 3 banks, and it made people start to really wonder whether the whole banking industry had the same problem. Because when the government puts all that money for all of this time, all of these years into these banks, they have to put it somewhere. And what they do is they choose to put it in longer dated maturities so that they can get a bigger return. But remember, those maturities were 1.5%, 2% for a decade. So what happened was they had invested in all of those, but then when the government pushed interest rates up like they did, there was huge capital losses in those. But they don't mark to the market unless they have to. So they don't. The banks that would have to raise money would then have to sell those out, and then the realities of their losses would come true. So that's what put all of these banks in this big decline. And since the government went in and made everybody whole, that is, all the depositors whole, then and money moving, of course, out of the weaker banks into the stronger banks, it even makes the stronger banks stronger. They realized that, and then all of a sudden everybody had relief, and the market started to get bought again. That wasn't in perfect timing for our analysis. So that's what I have to show you. I wanted to set that up because I wanted you to understand how things have happened in ways, especially in the gold market, which bottomed earlier than we expected to my disappointment, because I keep putting up these websites to buy more gold, physical, and lining up to do that, and then gold just took off. So I'm going to buy it anyway, because that was my intent, but maybe it'll pull back a little bit. So we have some things that changed pretty quickly. Now, we were looking for the bond market to move up while the stock market moved down. And that was a pretty bold call, because the bond market and stock market had been moving with positive correlations. But our call based on the alignments was that they would go to an inverse correlation again. And that's exactly what happened. Now, the bond market probably made an important bottom. Right now, the gold and silver market look like they make an important bottom. Platinum and copper, not so much, not yet. And your people that had got our level 4 members got that information today already on that. And the stock market, which I'll show you right now, the timing is a little bit off on it. Now, for those of you that are level 4, you've gotten my information, all of this that I had sent out with for those of you that aren't aware, if you're level 1 or 2, in the Futures Hub, you'll be able to see what I put up as the most notables, and I send that to level 4s on Tuesday or whenever I do an update. And one of the things that I mentioned in here on the most notable was looking back at on this daily chart here. Now, before I do that, let's look right over here, and you can see that what's happened is that you have this big update right over here, and that's a sizable update. It was up. The S&Ps were up 80 points at one point today, and you have this morning star pattern in here that is now formed. And that pretty much screams that the level that it achieved on the downside over here, just around 3,800, is an important bottom. Now, this low is early, as you can see, and if you look at the minor cycles right in here, this is really early. This is only halfway down in this next minor cycle, with that period of risk really going out over here into the next, we'll call it maybe 4 to 8 trading sessions. This looks like a bottom, but what I wanted to show you in here is if you go back to December I'll go back a couple cycles in here. I don't remember the exact dates, but we'll find them. So right in here, we're going to look at these cycles right here. If you look back what happened in this cycle, look at where the minor cycle made this low about halfway right there. And then it had this big 2 up days right there. And then it gave it up again and took out that low. If you look right over here, almost the same spot, about halfway through the minor cycle, and then it came up over here and then moved down again. So when I see that and I look at this and the timing is suspicious, and it's kind of, you know, it's driven on the relief from this, and momentum still negative, it has me believing that there's a pretty good potential that this is going to come down one more time. So, I mean, I'm convinced about it. I bought puts on the close because I thought, well, there's a chance they're going to open straight down. I could be a day early on that. But I believe that there is one more shot on the downside in here, where this lines up then with the intermediate patterns. You can see in here the slim ribbon PO, which is reflective of the slim ribbon, still is giving you these negative signals. You've only gotten to the bottom of the slim ribbon here, which is significant. You can see in here, it got to the bottom of the slim ribbon and then turned down again. This one got into the middle and to the top of the slim ribbon before it turned down. It took a couple more days. So I'm looking at this, I'm suspicious that the bottom will be tested or taken out by some small amount looking at that. If I look here at the weekly pattern here, you can see that, well, momentum is still negative. Let's just look a little bigger in here. And what I want to be conscious of from this point forward is that there are really excellent cycles in the Russell and the FEZ, the stocks 50, the big European 50 stocks, that point to this cycle right over here, which I've now added the projection in. So even if we, came down, let's say it came down, tested this low, and then began to rally again, which is highly likely, because remember that the daily cycle is going to turn up right there, and you can see we have it pointed up to a rally right in there. So on the weekly, it says, well, if it comes down and tests this low, it's pretty likely that it's going to be moving up again, because the weekly and daily cycles will be in positive phases once they've bottomed and then move up. I'm a little hesitant to say it's off to the races. And remember that my projected high is only at 4,300 this year. Of course, a long way from 3,800, 500 points. Well, maybe it's not that far, because I called this move down over here, which was going to be between 300 and 600 points on the downside. And that moved from close to 4,200 down to close to 3,800. So that was 400 points in the downside. So I'm going to call for a rally out over here to 400 to 500 points later on in the year. That's a little bigger picture. But you can see in here why there's a good reason to believe this is going to be a trader's market in here, and a lot of chop coming out in here. I don't think it's running away anywhere. And I also don't think it's going to collapse anymore, at least not in this period, because it's running out of time. That's why we made this area, which was testing out the bear market low, as a low probability. And now you could see as the time is going by in here, well, there's a chance it could do it out over here, but I'm just not thinking it's very likely. I'll tell you another reason why I don't think it's going past 42 or 4,300. So those of you that are super bullish, following some of those guys out there that are saying the market's going to 6,000 after this is over with, well, the valuations are just not going to allow for it. It just cannot happen. The Fed is not going to be easy again. It's just not happening. So if you get back up to 4,300, you're going to be at one point 180% of GDP, and there's no way the market's going to be able to hold up in those areas. So that's a little bigger picture I'm giving you right in here. I want to go to the Russell next so that you can see that cycle that I'm looking at on the weekly. And you can see in here that the Russell weekly low has come out into this May area right there. So were to be able to get this rally up into this resistance area up or over 1830, pretty likely that it would not be able to continue in there. Remember, the reversal scout shows the negative momentum in here, which still exists. And I have no drawings on here. And here you can see, well, you can see the Russell really was not able to really get a solid update even today. So that speaks to the likelihood of getting down and testing that low coming up. The Russell looks a little different because of the depth of the decline in here. I have in here the short-term resistances, and I have overlaid the weekly resistances right there, as you can see. Ari will speak more to that, I'm sure, when he does the Future Speak show. So this looking to me like there's a pretty good chance that out into May, it's going to make some pretty good lower prices. Now, I'm going to show you the Nasdaq and address the question that I was asked by Liz that I said when I did the year-end show that the market had I described the Nasdaq as brokenness when I did that, and just read it, and being significantly that brokenness was greater than in the SPX. Therefore, I assessed that the Nasdaq would experience a greater percentage drop from the previous all-time highs during the period of risk. That actually did not happen, at least yet. Now, the growth stocks, got bought again, and you can see in here looking at the Nasdaq that the amount of decline was probably a little smaller percentage. And if you look at our market condition monitor, it's showing. I'm just going to go to it right now because I'm trading off it every day. I just love it. It shows the QQQ is neutral, and the SPY and the IWM as bearish, and the diamonds is very bearish. So the Nasdaq is doing better. Now, to really do a good job of showing you the chart, I really need to go to the yearly, which I have not. I'm sorry, the monthly, which did I prepare a monthly? So here's the S&P 500 monthly, which you can see that we had looked for this to come down and potentially take out the low all the way down over here, or this was the low. So it's really giving an indication that that low is in place. Now let's get a picture of what this looks like in here, and let's look over at the Nasdaq monthly. Team, I'm going a lot deeper into this than I expected. So you can see in here that when you look at the Nasdaq monthly, on the monthly, it's not doing as well as the S&P 500. You can see it peaked here over the 38%, and now is closer to the low than the S&P 500 is. This is the reason, looking at the monthly chart, why I believed that there was going to be that the Nasdaq was more broken. Now, if I think about the reasoning for that, it's really much more about the growth stocks and the fact that they were trading at just huge valuations compared to what we saw in trying to get things aligned in here, sorry, compared to what we saw in what were the old economy stocks, which are now the ones that are seemingly getting bid. And that's why when I look at this cycle over here coming down into May, it makes me wonder if the Nasdaq isn't going to be weaker with those growth stocks running into trouble. Now, Apple got an upgrade, and remember that Apple is a huge percentage of this, and that's why it's overperforming on this intermediate term right now. But I have a feeling that that's going to change, and Apple actually recently got one downgrade, and I think Apple's going to make the Nasdaq be weaker than the rest of the market coming up pretty soon. So right now, when I look at the monthly, that's the reason why, Liz, and I still think that's going to be the case for that. So again, let's look at the daily here on the Nasdaq, and you can see that this rally in here in the Nasdaq was the best of all on the daily chart, and still that's extremely early, as you can see right over here, as it's only in the middle of this cycle. If it continues up and the market continues up and I lose my money on my puts, then what that's going to mean is that there's been a shift in here, and we will learn from that as it gets through these important levels in here. And the important level on the on the weekly chart, I put the new ones in there, and you can see in here that the warning level would be over 12,482, and then the bottom confirmed level right up over here, which is at around 12,640. So those are important levels right over there, and I have a lot of doubt that they're going to be able to get through there before the market has at least one more move to the downside in here, and then maybe to the period out in May. So I hope that answered your question, Liz. Yes, I still think that ultimately what's going to happen is the Nasdaq is going to end up the weakest of all of the indexes. That's a look at the indexes and my kind of big overview of that. I hope you found it all interesting and valuable. And I'm going to turn this over to Matt.
All right, Slim, that was great information and analysis as usual. All right, so I'm going to have this be a very brief segment. I'm going to give a update on the MCM beta testing. I'm going to share my screen, and then we'll get to the questions. Just give me a thumbs up if you can see the, all right, thank you. All right, so I'm just going to review this. So today is 3/14/23. The free beta testing period will end tomorrow. So starting tomorrow, probably late afternoon, the MCM will be removed from the level 1 and level 2 dashboards. Level 3 members will have access to the MCM premium standard version, which is currently in beta for a few additional days, and then it's going to be replaced probably early next week with our base version. Those who are currently level 4 or level 4 plus, as we've been indicating, they will continue to receive the MCM premium standard version at no cost for as long as they maintain their level 4 status. The major differences between the standard and the base are as follows. With the standard, you're going a standard premium version, you're going to get additional symbols. So we have about 100 right now. It'll probably be about 120 for the standard version. The intraday time frames will only be available in the premium versions. So that will include the standard, not the base. So that means the 15-minute and the 3-minute will be included in the standard. The near-term and intraday trader types, that will be only in the premium version. So that will be included in the standard. And then what's not here yet, which is coming, is that for the standard version, there's going to be some general notifications and alerts, which we're going to use the Discord platform for that. And those will be specific to the trade setup condition changes. So I'll show that in just a second in terms of what I'm talking about. And then this is in development right now, and I am testing it with our development team. We have an optimized mobile-friendly version. It is very, very slick, but it isn't what is called our UAT environment, which is user acceptance testing environment. So our team has got to go through all the different features and make sure that when we release that, the desktop version stays in place in terms of the quality, the dependability, and that all of what we expect in that mobile version is ready. So we're looking at for that to be coming out in the next week or two. So the goal is by 3/24, we will have that mobile-friendly version ready. I did not finish the sentence, but what I was going to say here is that I will be including in my trade planning sessions, and I'm sure all of us will be from time to time, but I will make sure that when I do a trade planning session, I will always include a segment with the MCM. So I know that we have a lot of new people that joined up recently, and this will give you an opportunity to hear more about that if you became a level 4 or level 3 member. Level 2 members can join those sessions, but the replay videos are available only for the level 3 and 4 members. The final point is the MCM Premium Standard will go on sale as an add-on to the premium memberships, and that will start on 3/24/23. We're still finalizing that pricing. There will be some introductory pricing, but we are finalizing that, and that is, again, targeted for about 10 days from now. Okay, so those are the specific points. In terms of MCM, when I'm talking about what will be the differences, main differences, when we're in these trader type views here, and you can see these trade setup conditions, and we have 4 different time frames. For example, let's say we're in the intraday, and you will be able to subscribe if you're in the standard premium version to trade setup condition changes. So there will be alerts that will go into Discord you could subscribe to if you want to be notified when things go either bullish or bearish in specific trader type setups. So that's what I was talking about there. And then in terms of specific timeframes that will be included in the standard version, standard premium, that means you will have all of these, and the base will have the monthly, the weekly, daily, and the 2-hour. And then in terms of trader types, the base will have the short term and the intermediate, and then the premium will have the near term and intraday. So that's the update that I wanted to share. And obviously we want to make sure that everyone has a good sense who has access to this to maximize it for their trade planning process. As Slim has mentioned, as we've talked about, and RV talks about, and Katie talks about, the 2 main points with the MCM is that we want to reduce your risk or the probability of trading against the dominant momentum trend, as well as positioning your opportunities to catch that next impulse wave when you are in alignment with that more dominant momentum trend. Now, there's no certainty with that, but all of the work that we do establishes a reliability for those types of scenarios to produce the highest odds of impulses when you're in that, when you're in alignment with that dominant momentum. So we've tried to establish a very convenient way for you to select your specific trader type and find trade ideas that will fit your style and your needs of your portfolio. So again, you can, throughout the session, you can very quickly go to the trader type you're interested in and click on those trade setup conditions, or you can go right to the time frames and you can position in there if you're looking for, let's say, changes in the 3-minute to see what's happening intraday, and you will get those updates all day long for the symbols we have in here. We've added, again, many new symbols, and those include a lot of country ETFs, a lot of other sector ETFs, and a lot of other funds. So there's a really broad list in here. All right, that's all I have right now.
That's great. Thanks for sharing that, Matt. And
You're welcome.
that is just unbelievable stuff there. And
It is.
I actually want to speak a little bit more to that, because I was just having a conversation with a trader, and the conversation was around what is what has been the greatest challenges to success in the market. And I've been trading 49 years. May 20th will be my 49th year anniversary from being a member of the CBOE. And I've seen every change in the last 49 years in the markets. I've traded almost every day in the last 49 years, except for a time when I was away on vacation. So the markets continuously change. And what has become very apparent to me, because remember, I made my money as a market maker, getting the edge in the market, standing there and making a bid ask early on. And then as I began to apply other things in the market, as the market changed, I became more versatile. What happened when the big changes came, when we got the penny trading and dark money trading out of dark pools and high frequency trading and all of that, well, they killed my edge, and they killed all the people that were floor traders, and they made the money that we did. So we had to find new ways to make edges. And that almost became an impossibility for people that came off the floor and wanted to learn to trade on the screens. I was one of the first people, because I actually left the floor, though I was a member till 91 on the floor. I left the floor in 84, and my best trading years ever were 84 and 85 from off the floor. So what really made the difference, and whatever since has made the difference, and what we've developed in here is a consciousness and a way to have a consciousness around the conditions of the market to really understand momentum. And you can see how we've been building our proprietary indicators and now the MCM all around momentum. And if answering the question, what's been the greatest challenge and what do I see? I've worked with, I can't even count how many traders I've coached. The biggest problem is that people get in the way of market moves, and they don't get out of the way because of psychological reasons, where if they take a loss, they end up believing they can't get the money back, and it's potential sabotage to their career. I see hands going up. Well, one of the biggest problems is that you eat like a bird and crap like an elephant. And that's what has gone on for so many people that I've worked with. And when you have reason to believe that if you take a loss, that means you're not going to be successful because you can't get the money back, then you don't take losses. And if you're on the wrong side of the market, the probability of getting in that psychological funk is higher. So that's why it's so important for you to be conscious of how do you stay on the right side? In other words, how do you position yourself for the highest probability of impulse? And if you get really adept at doing that, the profit loss structure will begin to change, that ratio for you in a positive way. And when that happens, you are much better at taking losses when the market changes, because you have made profits and you understand that you can be successful and have a profitable ratio. How many of you, raise your hand, understand your win-loss ratio? So I can tell you right now that about 20% of the hands went up or less. And if you don't have an understanding of your win-loss ratio, and that is how often you have wins versus losses, and how big your win size is versus your loss size, then you don't know how to fix what's going on. So the combination of things like, it doesn't have to be our market condition monitor. You can use any number of momentum indicators to keep you on the right side. And the discipline to make sure that you are building the proper win-loss ratios will make the difference in your success. And if I give you anything today that is valuable, that's going to be the most valuable for you. So I hope that you've just made some notes and are taking that in, because when I look at our market condition monitor, and there's going to be weaknesses to this. Sometimes it's going to be whipsawing. Sometimes the market's choppy. Sometimes you won't get, you'll go through periods where it's giving you indication you're setting up for an impulse in one direction, and it just doesn't go, and it'll chop around. Sometimes that's going to happen, but most of the time it's going to get you set up for when there is a big impulse for you to be on the right side of it, and you're going to just be astounded at what the difference is as far as what it means for your psychology and the bottom line. So I wanted to talk to that because I thought it was so important to mention after Matt's piece right there. All right, so now let's start to answer your questions. Team, take a look at what you're going to be doing. I see SMH, Enphase, XBI, General Motors, WDay LNG. That's liquid natural gas. Is that what that is? All right, I'll start to dive into this. So we're going to look over at the charts. You should now see the first question, which is on natural gas. So I'm going to /NG. This has been, of course, just one of the wilder slides that we have ever seen. I often talk about the fact that, that's not right. Where is it? There it is. That commodities can do this. Commodities can go and go and go, and you just wonder when they're going to turn, and sometimes they just don't. This is probably one of the most extreme examples of that. The question is, do you expect natural gas to make a lower low? So when you look at this pattern right over here, you can see that, well, it ran long by about, we'll call it 6 to 9 weeks from the earliest time it could have bottomed to where it actually bottomed, and it really bottomed about maybe 3 weeks past the what was the ideal bottoming range right over there, and about maybe 6 weeks from where those ideal troughs were. So it ran a really long period of time. Momentum in here, you can see, turned upward right in here. Now it's not really blasting off on the upside. The low right over here, which was under $2, and it's now at 257. I think taking out that low is a very low probability when you look at this, because we should be in all three of these rising phases, even though it's shifted over. Now, I didn't shift the cycles over because it's a pretty good odds that over here they're going to get back in alignment. So I don't really like to shift them when they're a couple days past the range over there. I suppose I could open the cycles up by some minimal amount, the cycle brackets, but yeah, I guess I could open it up by some minimal amount looking back over there, but it doesn't really tell you much. Really, here, I'd rather just show that it bottomed late, and that's because the downward momentum was so strong. And the upward projection right over here is to the minor 23, which is only 330. That seems like that's a long way, but not really when you look at how much it's declined in there. That's only the minor 23. That is the lowest resistance we will show in here. So I don't expect that to go down. Now, what I expect and what the realities aren't often the same, or are sometimes not the same. And here is where that low was right over there on that particular contract. And so that was at around 205. So if it were to get underneath that level right over there, as you could see, that would mean trouble. It tried to get into neutral momentum, as you can see the slim ribbon PO. By the way, the slim ribbon PO never lied to you. You can see in here, as it was telling you all along the way, about the downside resumption to momentum conditions. Again, I'm going to stress the importance of momentum. You had no reason to be buying it here, not at all, not on our work, or you had every reason to be saying it's going to continue to the downside. Here it neutralized, but look what happened again. So it shows you that there is a lot of weakness in here, but looking at the cycles, I have a hard time believing it's going to break under that 205 area that we can see there on that contract on the daily chart. So that's the look at natural gas. Raphael makes a point that I've talked about this date that it made the low for a month on the stock market, and there it is. So it's, I think, probably going to get to that March 23rd test, looking at that. What's the outlook for gold and silver? So, of course, the level 4 members already have that on their charts, and RV is going to talk about this extensively in the Future Speak show, which is for level 2, 3, and 4. All you guys that are level 1 members out there, I really encourage you to step up and start thinking about this MCM. It will make a difference. So you can see in here, I mean, those of you that understand the visual aspect of cycle analysis, I mean, it's pretty hard to believe that anything happened in here other than the bottom that we were looking for to occur having already occurred. How long did we have this as a buy zone in there? Weeks and weeks. And you can see that it just blasted on the upside right over there. And here was the ideal range for the trough in there. This certainly looks like it turned upward. It got up here already in the 3rd week off the low to the 61.8%. That is a ton of strength that you can see. So any pullback in here, in my opinion, is a buy. And like I said earlier in the show, I wanted to buy it under 1800, and I messed around because I thought I would be able to pinpoint it exactly in my arrogance. So no, it ran away here, and I'm still going to be a buyer, and hopefully it'll give some dips and I'll be a buyer again. So I think it's a high probability. Look at the patterns in here. Now, of course, our level 4 members now know that the cycle brackets have been reduced slightly. I actually didn't have them reduced as much, but then Arvi wrote to me and said, well, how do I explain this? And that was a good point. So I had to go back and look at that and said, there's been a shift in here. This tightened up. So this low here aligns with the weekly low that we've occurred. And you can see that this did occur early. That came as an early bottom based on the banking issues and peaking dollar. So you would say, why is gold going up based on the banks? Well, it's based on the fact that the Fed doesn't care, and the government doesn't care about how much money they print, and that they're in an inflation battle. They're not going to win this way. And the dollar is going to be in a lot of trouble. And the dollar has a breakdown going on right now. So people that want to invest in things that are denominated outside of the dollar are going to be buying things like gold, silver, and Bitcoin, which they have just absolutely screamed into. I'm not a buyer of Bitcoin because I don't believe in it, but I wouldn't own any, but our analysis turned bullish and I say it. So that's the look in there. Gold market has bottomed. I think, to me, it's very clear. And I think that the silver market /SI is clear, but I'm not as positive on there. And one of the reasons is that when you look at the industrials, the industrial metals, platinum and silver is part of that. And then what you see in there with copper is that they just are not rallying as much. Also, the low in gold is a major low. This over here, while that's an important low, is really a minor low in this cycle, but it's way above this low. So it could easily get up here to 23. This is 2380 right there. So 23 to 2380 is the upside target in here. Does it look like a bottom to you? Look at where these bottoms are right over here, and you can see that it came right on time. This right here, I had to tighten up by a couple of bars because so that's what the market has done. So you can see that the silver brackets are shorter in length. In other words, the wavelength is shorter, and that's all on these same issues right in here. So gold and silver look like they've bottomed. I didn't put in the supports or the buy zone in here yet because we're still just making the peak on this first upthrust. So I want to see where we are in the next couple of days, and then I'll be putting in some buy zones down over here. And also, I want you to note momentum in here still pointing down, momentum in here still negative, but about to go neutral. So that would be a good sign in there as that momentum begins to improve. So that's the look at the gold and silver market. And I hope that was extremely valuable to you. And just amazing how these things have really lined up so nicely with even things that, change the correlations like the bond market to the stock market. So Michael wants to know, Steve, how long do you see this relief rally ending or lasting? I think what you're asking is about the stock market, and I think I covered that already, which means that I don't think this particular relief rally is going to last that long. I think I covered for Anonymous the gold market in there. Jeff, I answered that on the SPY already by looking at the SPX. George says, Slim, didn't the Fed put forth all kinds of stress tests on the banks? Well, I don't know that they stress test the ones that they don't consider to be so big that they can actually take down the whole economy. So the smaller banks, which of course these banks that failed fit into the category, I don't know that they had the same kind of stress tests. The SVB bank is the 16th largest bank in the country, or it was. So that should have been, in my opinion, part of the stress tests, but I don't have a lot of faith in their ability to actually test those markets and when those companies, and when you consider the fact that they do not, they let the banks hold these things to maturity, all of these treasuries, and they could be holding them for 10 years and never mark them to the market. But when a bank gets in trouble, that marking them to the market is important. So I think banks should have to disclose their losses, even if they're losses that are that they have not taken or don't even have to take, so that depositors can really see the truth of what the conditions are of the bank. Alexandra, I showed the monthly cycle on the S&P 500 and the Nasdaq already. So if you didn't see that, please refer to the video. Diana says, Michael Burry points out similarities between now and the first half of 2002. Given the fact that the market has not priced in earnings declines yet, do you think there's a possibility we'll have a waterfall type event into May, June? Well, I think that if we do have one, it would be probably in April, May, into that May bottom. And that is still, of course, a possibility based on the patterns that we see in here. I have a lot of respect for Michael Burry. He's been a fantastic analyst, and of course, we all know that if we've seen the movie. So he had success. He was successful beyond belief, and took amount of pain that none of us should ever have to take before he did find finally that market break. So I think he's really good. And I do think that, based on market valuations, and people will hold out to you that, well, the S&P is only at 18 times PE or something like that, forward PE. It's not that overvalued. Well, if you look at it versus the CAPE, it's much more overvalued than that. And if you look at it versus the S&P versus the GDP, it's much more overvalued than that. So it's possible. Remember, I lived through seeing 12 PEs in bear market lows and 10 PEs, and seeing stocks that were fantastic stocks at high PEs cut down to 6. So when I first became a trader in 1974, I mean, that's the market I came into, was that bear market. Maybe that's why, I'm a trader. Everybody's a trader, and bear markets, traders like bear markets better. So maybe you hear me more excited when the market moves down than when it moves up. I try to even that out the best I can. But yeah, there's a possibility for still the market to give some good downside and to really struggle getting a lot of upside. Slim, how far out is the expiration of my puts? Oh, well, I'm trading over the next few days. I have an 8 DTE on the ones that I bought just for the next couple of days. So, but no, normally I go a little further out than that, maybe between 10 and 15 for trading purposes and spreading purposes. Slim said he saw a strong support for crude oil between 71 and 73. Today's email implied you're revising the target downward. Do you have any new estimated downside targets set? I actually don't, and I actually think it could very well stay in the range that I've been talking about. If it gets under that level in the 70s, I don't have the exact number, then it will be a breakdown underneath that range. And the intraday, the daily pattern did break down under a key low, which Ivy's going to show you tomorrow. So that would be, I think, important for you to watch the future speak. So we're going to have to stop the questions now because we are going to run too late if we take any more. Liz says notifications, alerts via discard for trade setup conditions changes will be valuable. Thank you. And Manaz, hey Manaz, he says, wow, MCM, what a great job, and congrats to the team. I want to say that too, just fantastic. We have Capital Group, Momentous Capital Group, I like that name, asking about the Bitcoin market. So let's switch over to Bitcoin here. And I don't know why I don't have these drawings up here. So here's Bitcoin. We were looking for it to form a low in a positively configured right-handed translated cycle. If that was just a bunch of gibberish to you, then head over to our cycle analysis workshop and begin to learn from the glossary that we have. Matt, you put up a glossary somewhere, and I forgot where it was for all the members. Where do we do that?
For all the members of the cycle workshop members.
Oh, that was the cycle workshop members. Sorry.
Yeah, I can put it up for all premium members too.
Yeah, I think all premium members should get a look at that glossary.
Okay, I'll do that over the course of the week.
Yeah, okay, good. So when you look at this and you see that the formation in here clearly formed a base, and that this rally already got over the previous peak right over there, those of you that are trained to have trained eyes in cycle analysis, raise your hand if you can see what the meaning of this just the instant you look at the chart. All right, so there are a ton of hands going up, which I absolutely love. So this is a bullish chart. Now, forget what I say about Bitcoin and cryptocurrency having no value and going to zero and all of that. Forget it. That has no meaning here. What we're looking at is a bullish chart, and we're going to remain agnostic and say that the projections in here right now point up to about 27,800 right there, which is that major fib, and this is the fib extension zone that comes from this cycle. So that would put the bottom of it there at 25.9, around 2,600, and 27.8. That to me would be the target. And look, it already got up into there. So I think it probably has the ability to go higher than that. And we'll just leave that in as our first target. So you can see in here where I put in these projections, and this actually needs a little updating because it ran past those forecast lines. The major 23 is that 27.8. The top of this is right there is at about 28.5. I see it worst case going up to 28.5 in here. Now, if it gave up a huge amount in here, and I'm just going to use the fib tool right in here, you know, if it got down under that 78.6 at around 2,100, well, that would say to us, well, this bullish case is not true. I mean, it's just very unlikely that it would continue on the upside. So that's not what I expect. What I expect it's going to be moving to the downside again, giving us a buy zone in here, which we'll add in here now that we have this peak, and then likely to be moving to the upside again. So that's the look at BTC. We have Meta, SBR, UAN. Jeff is asking about light crude. So I think I'll go back and I'll just look at that light crude chart really quickly. Leave it up here on the side by side. And it did get hit very significantly. The first thing I saw when I did the charts this morning was this breakdown right over here. The next thing right over here, as you could see, wow, I didn't realize it got this low towards the end of the day. So yeah, this is threatening that support area that we had right down over there. That's around $70. If it gets under there and has all of this time right over here, then this dominant cycle is either ineffective or it's already turned down. And that would be a pretty negative case. So getting down to where it has is already a pretty good sized warning that with 2 months to go before the low's in place, that looks like it's moving down below the range that we were looking for in the light crude market. All right, I'm going to turn it over to the two of you and let you two of you decide who is going to show what. We have only about 15-20 minutes at the most to do what you're going to do. So RV and Katie, take it over.
All right, thanks very much, Slim. So Katie, why don't you go ahead and do yours first, and I'll take the others, okay?
Okay, let's look at end phase first then. Let me share my screen. Can you see end phase?
We can. Yep.
Yes.
Okay, great. So this is a symbol that's in the solar category. And let's just look at this last cycle here. You can see that it's very negatively configured. That means that it ended much lower than where it began after having hit this 50% fib extension level. So now we've got an upturn momentum with the green reversal scout. So that confirms our intermediate low. These cycle brackets down here on the bottom are 18 bars in length. So we're going to have another timing window out here in the summer. Now, I've got this projected up into the very bottom of the resistance zone. This is not screaming at me as a paragon of strength or anything right now. It's, I'm really kind of doubtful about whether it can get way up there just based on, this huge decline. That's why the resistance zone is where it is. You take this peak and this low and create the resistance zone with the fib retracement tool. So we'll see how it does. It's just kind of, sideways to a little bit higher. Over on the daily chart, let me zoom in a little bit. You can see that enormous decline. These cycles are 39 bars in length, and we've got a positive reversal scalp, but it's really flat. The slim ribbon is just neutral. So what I would like to see is for this to maybe just hold up in here and form a basing cycle, and then let's see if we can get a little bit more strength out here in the spring. That is end phase. And XBI was the other one I was going to look at for someone. So you can see that we're in the weekly cycle timing window right now. We got to the very bottom of this support zone, basically tagged it last week on the 61.8% fib. So this is a basing cycle. So we would expect if this holds up to be able to at least retest this high, if not take it out, going out here into the later parts of the year. Right now, we still do have a negative reversal scout, so we'd like to see that turn positive. Over on the daily chart, let's zoom in on this. Okay, so we are in the middle of this cycle, and many of the focus list symbols are looking like this, where we're kind of in the middle of the cycle, and I think that we can get this retest of this level. So back over on the weekly chart, this might not be the low. We might retest it or take it out just a bit going into this daily cycle timing window. The ideal is beginning of April. So that might happen there. We'll have to see if we get these resistance areas in here to hold. Negative momentum in here, negative reversal scout, negative slim ribbon. So this would, if we put in a minor resistance zone here, we would want it to stay below $82-ish and watch for a turn back to the downside on the 2-hour chart to possibly set up a sell zone here. So that is XBI. Looking like a good opportunity coming up, but we would want to see this cycle finish up.
All right, beautiful. Thank you so much, Katie. Appreciate it. Let me go ahead and take over the screen. We'll look at SMH and a number of others here.
Thanks, Katie.
Sure.
So you should see the weekly cycle chart for the semis, symbol SMH. And what we have here is an overall very bullish pattern. So you can see we have had lower cycle lows, lower cycle highs here. And now we have a higher cycle low that is likely to form versus this little low basing cycle. This is looking like a nice little pattern that's setting up overall for higher. So right now you can see we aren't really giving a whole lot back. There's a low here that's due 327.251. We're looking for this zone from 232.5 to around 219 or so to hold on the downside. And then very good odds we move through these old highs at 255.64 in this next rising phase here in the SMH on the weekly. If we shift over, you'll see this is just really flat right now. It's not doing a whole lot, but we are looking for just one more move down, and that will likely set up a very interesting move back to the upside here. There is a low that's due 4.3 to 4.14, and we are looking for a move down into the zones that I have just mentioned to you. Okay, so that's the look at the SMH for Bill. Let's go ahead and jump over to General Motors. And this has been moving all over the place. So we have had this in yellow for some time here. We are looking for this to move down, and this was, as you can see, in each of these cycles period of risk on the downside. We've left this in for some time. These are those areas where in each of these cycles, you can see the late sell-offs that actually form the low. This is likely what is happening right now as well in GM, but no low is in sight as of yet. On the downside, we have a 78.6 at 33.25. We are looking for it to hold around that area, and then we would watch for it to turn back to the upside. And there's a low that's due 220 to 410. Jump over to the daily chart again. I haven't updated this since our last look, but it didn't really need anything here. You can see I was looking for it to sell off, move down. It has. It's acting well. There's a low that's due really right around now. If we use our fib draw right here, anchor it from high to low, go from that low to that high, you can see it's holding right at that 78.6 at 34.89, a reasonable area for it to now hold and then start to turn up. So watch to see off of this low how it actually moves. Does it end up rallying for most of this period? If so, we will watch for that to form that higher low basing cycle and then turn up. So we have to watch for this to really happen here in GM, but currently bearish overall setup here. So this has work to do to really prove the low. That's really what I want to emphasize. If we go ahead and jump over to W day, again, we had some work already on this, which was basically in line, so didn't have to do a whole lot here to this. You can see this is now putting in a higher low base as well. So this is finally, after a obviously very large sell-off here, putting in this higher low basing period here. There's a low that's due 327 to 51 as well. Likely that this zone would hold from 168 to 153.5, and then we look for this to turn up again, but still likely has a little bit more on the downside prior to forming that low. Let me highlight why. So if we look at what's going on here, you can see we had a low that was a little bit past due. We formed it just about 1 day past where we were looking for that low to form. That low was due 224 to 310. Looking for this rally to form a lower high versus this old high right there at 193.92, and then turn back down as this next cycle low is due around the end of April to the very early part of March. Jump back to the weekly. That's in line with what's happening here on the weekly as well. Okay, so looking for one more pullback to then set up a likely long side opportunity here as well in W day. If you want to pull up LNG, okay, this is LNG. We already have work on this as well. Obviously, we all know just been running to the upside, higher cycle highs, higher cycle lows, bullish uptrend firmly in place here. And then this is now starting to show a little bit of weakness. Know how this has sold off. We were looking for a rally just to that 61.8 to the 78.6 area. It did get right up that 61.8 and is now starting to back off. So we're looking at this low right here, which is due towards that end of April to the early part of March, starting to sell off into that. So we're looking for it to actually trade a little bit lower down into that 142 area. And then get a bounce off of that. But this is not acting as well as it has, obviously, in each of these cycles. So a little bit of a warning sign here that's happening in LNG if we lose that 78.6 at 141.92. If you want to jump over to the daily chart, you'll see what's happening here. Again, there was a low that was due right around the end of last month. The low formed, and then we turned up. But then you can see what happened. A nice bull move post earnings that then has now fizzled out, and we're now looking at this key level right here at 147.44. A high has likely formed in that cycle, and we're looking for this to now pull back, and there's a low that's due 4.6 to 4.18, reasonable to get down to this old low at 142.26 in Cheniere Energy. If we go ahead and jump over to the XLF, and you'll see what's happening here as well. Let me jump back to the weekly. Again, this has clearly weakened. As we all know, very large sell-off here has likely now marked the high for this longer cycle right here. Let me get my pointer. It's a 33-bar cycle as well. Note that there is a low that is due to form shortly here. Now, this, in all likelihood, would only form a lower high, and then we look for it to sell off again. So watch for that lower high to form versus this old high right there at 37.11, form that lower high, and then turn down again to form this next key low. And there's a low that's due 5.1 to 6.19. So
I want to
there is
interject.
risk. Yeah,
you know, that's the same thing as the stock market we're talking about.
that's exactly right.
Yeah.
Which really makes a lot of sense, right? So looking for just that bear flag to form and then risk into that May, June time period.
Mm.
A lot of underlyings have risk into that May, June. So that's really what is in focus here. We'll finish up with the daily chart again. Early high that formed here as well. Likely that this has one more dip coming prior to forming that key minor cycle low, and then you'll get a little bit of a better uptick here in the XLF. Looking for it to fail in the zone from 33.26 to 34.37. If it actually moves up, so let's say that we actually have a move like this that ends up rallying for more of this area here, that would simply indicate that this low that we are looking at that had formed around 3.2 actually pushed out, and this is a late low. So it is really key to watch to see if this zone from 33.25 to 34.35 holds on the upside. If it does, then we will look for one more dip down into this low, and then a likely solid tradable rally back to the upside in the XLF. Okay, so that's what we have to really keep our eyes on, is whether or not these zones hold, and there's a short-term low based on what we have here that's due 331 to 412. So that is the look at the XLF. We will look at the XLE, kind of on a roll here. So let's keep going. There's the XLE right here. This is not a good pattern. That's why getting really worried here about what's happening with the oil stocks. They are acting weak. So we're now seeing crude follow. That's, frequently what happens. Oil stocks will actually frequently lead. That's what's happening here. You can see how off of that key low, look what it did. It just went sideways. It didn't make a new high. It actually failed at that key 78.6, turned down, as now broken the low. And this is indicating a likely early top in the oil stocks and possibly in crude as well. We'll have to see. Looking for a move down into that 161.8 around the 73.5 area. That looks reasonable, and it may well trade lower. We'll have to see. But the overall bias is negative here on the weekly. There's a low that's due 424 to 612. And on the daily chart, again, not looking well. You can see lower cycle lows, lower cycle highs, a core negative bias here as well. There is a low here on this longer cycle that's due out in the early part of May. So a negative bias here as long as we hold below this old high at 87.69. I don't have OIH. Katie, do you have the OIH updated? I apologize. I didn't see that one.
No, that's okay. I think I do. Let me take a look real quick.
All right.
I was just looking at it earlier today. Yes, let me share my screen. Were you done with the others?
Yeah. Yep. We're all set.
All right. Okay, let me just remove that so you can see it better. Here's the OIH. We had this large cycle, and when it retraced into the top of the support zone, so then we anticipated that it would make a new high, which it did. It took that high out by just a bit. Then it kind of started chopping sideways, and then this week it just, kind of gapped down below the 78.6% fib now. So we have this intermediate low due out in May to middle of June, and we have negative momentum in here. So anticipate that any rallies in here will set up good sell zones for a move lower. Could look at least the cycle low support down here at 270, perhaps lower than that down to 252. Over on the daily chart, I've got a lot of alerts and notes. So here was our cycle low. You can see we broke the cycle low support this week, and I have this resistance zone in there. I think I put that in earlier today, but I need to lower it a bit. So that would be a good selling opportunity for a move down into this daily cycle timing window between 328 and 46. Momentum in here is negative. Again, with the negative cycle structure now, we would expect the rallies to fail. That's all I've got on OIH.
Very good.
Great. Thanks.
RV, are you all done?
Yep. We're all done. Yep.
Okay, great. Let me just say if we missed anybody who had a question in there on any analysis, sorry about that. We do limit the time that we do things, usually running about 70 minutes, or else it kind of gets too long. So the couple more questions I just want to answer very quickly that I think are important. BJ is asking questions about chart streams and about the SPX chart and 15-minute charts. I want to really encourage you to write to Matt at askSlim.com, and he'll be able to help you with that. That's a very good question, and being a new member, I know we have so much going on that can be confusing. So Matt will help you with that. We have a question that asked, do we do cycle analysis on real estate? Only on the real estate ETF is the only thing we really look at, and home building stocks. I mean, not any REITs or any of that stuff in general. We have a question from George that asked, do you have any back tested on psychographics? I don't know what psychographics is. You're talking about the beginning of the super cycle from 1929, and what is the longest cycle I observed? I observe some longer cycles that are in the category of 7-year and longer. And I show that if you look at the beginning of the year-end show that I did, I talk about those longer cycles. So that's it. That's everything we're going to be able to cover today. We had a huge crowd in there. I hope we did a great amount of good for you in learning about our analysis and seeing some potential opportunities in this educational and entertainment work that we do. Team, what do you got to say?
Thank you, everybody, for participating. Have a great evening.
Great show, guys. Thanks, everybody.
Yep.
Take care.
Yeah.
Same. And if you do have questions and you're brand new, make sure to write to me. We have a very robust resource area on the site.
Fantastic. All right. We'll see you in a couple of weeks.
All right. Take care all.
Bye-bye.